Hello everyone. Welcome to the Stock Minds web channel. NVIDIA Corporation, NASDAQ, NVDA, has once again delivered a blockbuster performance in its Q2 fiscal 2026 earnings report, showcasing exceptional growth across key financial metrics and reinforcing its pioneering role in the AI-driven technology revolution. With revenue and earnings surging year over year, alongside robust margins and cash flows, NVIDIA's stock remains a compelling investment, striking a balance between growth and valuation. In this video, we will dive into NVIDIA recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About NVIDIA. Founded in 1993 in Sunnyvale, California by Jensen Huang, Chris Malachowski, and Curtis Priam, NVIDIA Corporation began as a graphics processing unit GPU specialist focused on gaming and multimedia. Over the years, it has transformed into a powerhouse in AI, high-performance computing, data center infrastructure, professional visualization, and automotive systems. Today, NVIDIA commands over 92% of the discrete desktop or laptop GPU market and controls 80% of the market for GPUs used in AI model training and deployment, positioning it at the heart of the global AI infrastructure boom. NVIDIA financial performance. In Q2 fiscal 2026, NVIDIA Corporation delivered an outstanding financial performance, driven by surging demand for AI infrastructure and data center solutions. The company reported revenue of $46.74 billion, marking a 55.6% increase compared to $30.04 billion in Q2 2025. Earnings per share (EPS) for the quarter came in at $1.08, up 61.19% from 67 cents in the same period last year. On a trailing 12-month TTM basis, NVIDIA achieved revenue of $165.22 billion, representing a robust 71.55% growth from $96.3 billion in Q2 2025, while EPS TTM rose 64.84% to $3.51 compared to $2.13 a year earlier. Additionally, free cash flow per share (TTM) surged 83.04% from $1.88 to $2.92, reflecting NVIDIA's exceptional cash generation capability. The company also maintained industry-leading profitability, with a gross profit margin of 69.85%, net profit margin of 52.41%, and a free cash flow margin of 43.59%. NVIDIA efficiency is further demonstrated by its impressive return on assets of 53.09% and return on equity of 109.42%, while keeping a healthy debt-to-equity ratio of just 0.11. Over the past 5 years, NVIDIA revenue has grown at a 66.5% CAGR, net income at 94.6%, and free cash flow at 83.5%. NVIDIA has proven to be a fast grower and is expected to continue growing rapidly as the AI industry remains strong. NVIDIA Fiscal 2026 Financial Forecast. Looking forward, analysts remain highly optimistic, projecting 2026 revenue of $206.38 billion, a 58.15% increase from $129.29 billion in 2024, and forecasting non-GAAP EPS of $4.48, up 49.83% from $2.95 in 2024. Reflecting this confidence, analysts maintain a strong buy rating on NVIDIA stock, with a consensus price target of $207.01, representing a potential upside of 21.23%, while the most bullish estimate sets the target at $270, implying an impressive 58.05% upside potential. NVDA stock price performance and valuation. At the time this video was created, the stock was trading $167.02 per share, representing an impressive 60.3% gain over the past year, far surpassing the S&P 500's 19% increase during the same period. Over the past 5 years, NVIDIA's stock has skyrocketed 303.7%, dramatically outperforming the S&P 500's 94.6% growth, reflecting the company's dominance in AI, data centers, and GPU technologies. Despite this massive rally, NVIDIA remains attractive for long-term investors. The stock offers a small dividend yield of 0.02%. The stock's current price-to-sales (PS) ratio is 24.92, with a forward PS of 19.82. Its non-GAAP price-to-earnings (PE) ratio stands at 47.28, while the forward PE is lower at 37.57. Meanwhile, the price-to-free cash flow (PFCF) ratio is 57.61. Based on Fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS is above the average, the forward PE is below the average, and the PFCF is in line with the average. This shows that NVIDIA stock is still valued fairly, as its financial metrics are still growing rapidly. NVIDIA growth potential. NVIDIA growth prospect remains strong, driven by several factors. 1. Blackwell architecture platform dominance. NVIDIA's revolutionary Blackwell architecture represents a paradigmatic shift in AI computing infrastructure, establishing the company as the essential backbone of the global AI transformation. The platform delivered extraordinary demand metrics in Q2 2026, with sequential revenue growth of 17% and production ramping to over 1,000 racks per week, positioning NVIDIA at the epicenter of the AI race. Major enterprise adopters, including Disney, Hitachi, Hyundai Motor, and SAP, are implementing Blackwell-equipped servers. While cloud service providers like AWS, Google Cloud, Microsoft Azure, and Oracle are deploying GB200 systems globally to meet unprecedented customer demand. The platform's energy efficiency and significant performance gains over previous Hopper architecture create compelling value propositions for customers running advanced reasoning AI and inference workloads. It's establishing sustainable competitive advantages that extend far beyond traditional chip manufacturing into comprehensive AI infrastructure solutions. 2. Data center revenue scale and market leadership. NVIDIA's data center segment achieved remarkable scale in Q2 2026, generating $41.1 billion in revenue, with 56% year-over-year growth, representing approximately 88% of total company revenue, and demonstrating the transformation from gaming hardware company to AI infrastructure powerhouse. Cloud service providers accounted for approximately 50% of total data center revenue, indicating deep penetration into hyperscale infrastructure buildouts that form the foundation of global AI deployment. The segment's networking revenue reached a record $7.3 billion, reflecting 98% year-over-year growth and 46% sequential growth, driven by strong adoption of GB200 NVL72 and GB300 NVL72 systems that rely exclusively on NVIDIA NVLink Fabric, Ethernet, and InfiniBand solutions. Management projects $3 to $4 trillion in global AI infrastructure spending by the decade's end, with NVIDIA positioned to capture significant market share across training, inference, robotics, and emerging quantum computing applications. 3. Strategic market position and future growth trajectory. NVIDIA has established itself as a comprehensive AI infrastructure company rather than merely a chip manufacturer, with CEO Jensen Huang emphasizing the company's role in enabling the next industrial revolution through AI factories and enterprise transformation. The company's Q3 2026 guidance of $54 billion revenue represents 54% year-over-year growth and 16% sequential expansion, demonstrating continued momentum despite not including potential H20 chip sales to China, which could provide additional upside if geopolitical restrictions ease. NVIDIA's vertical integration strategy spans hardware, software, networking, and system optimization, creating ecosystem lock-in effects that enhance customer retention and pricing power across training and inference workloads. The company's positioning in emerging growth vectors, including automotive AI, robotics, quantum computing, and sovereign AI initiatives, provides multiple expansion opportunities that could sustain high growth rates beyond the current AI infrastructure build-out cycle. Risks to consider. While NVIDIA seems like a good investment opportunity, we should be mindful of potential risks. 1. Regulatory and export controls. U.S. export restrictions on advanced AI chips to China have significantly hurt NVIDIA revenue, causing an estimated $15 billion loss, with substantial inventory write-downs and margin pressure. The GAIN AI Act and related export controls have created operational challenges, limiting NVIDIA access to the large Chinese market and increasing compliance costs worldwide. These restrictions have also forced product modifications and impacted earnings forecasts in 2025. 2. Geopolitical risks. Trade tensions, tariffs, and geopolitical conflicts, especially between China and Taiwan, pose significant risks to NVIDIA's supply chain and market access. Disruptions could arise from regulatory changes or escalating conflicts, impacting chip manufacturing and sales. Taiwan's role as a key manufacturing hub adds vulnerability amid rising U.S.-China tech tensions. Sudden policy shifts or supply interruptions could severely affect NVIDIA business performance and global growth prospects. 3. Intense competition. NVIDIA faces increasing competition from AMD, Intel, and emerging AI model providers, especially in markets affected by export restrictions. This competition threatens NVIDIA's dominant market share and its leadership in AI accelerator margins. While NVIDIA currently holds a commanding share of over 80% in AI accelerators, rivals are advancing, seeking to capture customers through cost advantages and diversification. This growing competitive pressure poses risks to NVIDIA's sustained market leadership. Conclusion: NVIDIA Q2 2026 results highlight its unmatched growth momentum, strong profitability, and leadership in the AI and data center markets. With revenue, earnings, and cash flow expanding at record pace, alongside efficient capital use and minimal debt, the company remains fundamentally solid. Despite premium valuations, its future growth potential and dominant market share justify investor confidence. Backed by strong analyst ratings and significant upside targets, NVIDIA stands out as a compelling long-term investment opportunity in the evolving AI-driven economy. But remember, this is not a financial advice. What do you think about NVIDIA? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.